But now Arizonans are experiencing an affordability crisis, and this is a crisis of historic proportions. You agree? You know that. You know what's going on in this area in particular. Today, not a single major city in Arizona is considered affordable, not one. When I was president, nearly 2/3 of the homes in Phoenix were considered affordable for families making the median income. Think of it, 2/3, and now it's none. Today, the number of homes that are affordable for those middle-class families is down to a number that you don't even want to hear. It's almost like nothing.
President-elect Trump addressed housing affordability problems throughout his campaign and has outlined his plan to make housing affordable. His plan includes opening up federal land for building homes and getting rid of some housing regulations that slows down building homes and adds to the cost. He also pledged to make housing affordable by cracking down on immigration by deporting undocumented immigrants, stopping immigrants from crossing the border, prohibiting undocumented immigrants from getting mortgages, and by executing the plan that I'm discussing in this video, bringing back 2% mortgage rates.
Here are the other pillars of my plan to end this nightmare and help millions of Arizona families afford the house of your dreams. We will rapidly reduce inflation by slashing energy costs. We're going to slash energy costs, taxes, and we are going to slash regulations. By quickly defeating inflation, we will in turn bring interest rates down very fast. When I was president, interest rates were hovering around 2%. Today, the mortgage rates are at 10%, 11%, 12%. You can't get the money. We're going to bring it down very fast. We're going to bring energy down. We will drive down the rates so you will be able to pay 2% again, and we will be able to finance or refinance your homes drastically at much lower costs. You do a refinancing or a financing if you're looking. This step alone will save Arizona families between $800 and $1,000 per month on their mortgage for a typical home.
2% again? So as you saw, President-elect Trump pledged to lower mortgage rates by cutting inflation, and he plans to cut inflation by reducing energy costs. But how exactly are mortgage rates determined, and how does inflation play a role? Can President-elect Trump's plan be carried out? As a side note, did you hear President-elect Trump state that mortgage rates were 10%, 11%, and 12%? At the time of his speech, mortgage rates were a little above 6%. It's been over 30 years since mortgage rates have been at 10%. This makes me wonder how in touch he is with the housing situation. So, how are mortgage rates determined? Mortgage rates are primarily influenced by several factors: the overall economy, inflation, the Federal Reserve's monetary policy and investor demand for mortgage-backed securities, and factors that we can directly control, such as our credit score, down payment, loan programs and terms, etc. But let's focus on Trump's way to reduce mortgage rates: reducing inflation. What is inflation? Inflation refers to the rate at which prices for goods and services rise over time. A moderate level of inflation is normal and even healthy for an economy. However, when inflation spikes, it leads to higher costs across the board, including housing and mortgages. Because when inflation is high, the purchasing power of money decreases, so lenders demand higher interest rates to compensate for the diminished value of the money they'll be repaid over time. Inflation is impacted by wage and labor costs, supply chain dynamics, global economic trends, consumer demand, and government spending. Inflation is also impacted by the actions of the Federal Reserve. The Feds often combat inflation by raising interest rates to cool off the economy, which indirectly impacts mortgage rates by making borrowing more expensive. Energy costs significantly impact inflation as well because they affect the price of goods and services across industries. For example, higher fuel prices increase transportation and shipping costs, which raises the cost of food, clothing, and other consumer goods. Energy prices are volatile and often influenced by geopolitical events, supply disruptions, and changes in demand, such as during economic recoveries or downturns. Trump plans to lower energy costs and therefore inflation and mortgage rates through increased domestic production, investments in renewable energy, or improved infrastructure. This will help ease some inflationary pressure. However, energy is just one piece of the puzzle. Here are my thoughts, and I'd like yours. President-elect Trump plans to tackle inflation by cutting energy costs. Energy prices do play a role in inflation, but it's only one factor, as I stated earlier. Addressing inflation requires a comprehensive strategy that considers all of these factors. A focus solely on energy costs may provide limited relief without tackling underlying issues like labor dynamics, supply chain resilience, and global economic pressures. What are his plans regarding the other factors? Could his complete economic plan make inflation worse? As for mortgage rates, they too are influenced by a complex mix of economic indicators. It will take more than cutting energy costs to bring rates down significantly. My advice for those considering buying a home is crucial to understand the current market and mortgage trends. While political promises can influence market sentiment, they don't guarantee immediate changes in rates. The best approach? Stay informed, shop around for the best mortgage offers, and work with a trusted real estate agent who can guide you through the process. A popular phrase and good advice for those concerned about high mortgage rates: date the rate and marry the house. You can always kick that mortgage rate to the curb by refinancing when mortgage rates go down. What do you think about President-elect Trump's plan? Will cutting energy costs be enough to bring mortgage rates down? Let me know your thoughts in the comments below. Don't forget to like, subscribe, and share for more insights on real estate and the housing market. Thank you.